Hello and welcome to Mint's Pivot or Perish series, where we look at the key issues which are shaping our lives in the post-COVID world from the lenses of businesses and enterprises. As all of you already know, that the theme today is India's banking sector, which is undergoing a rapid transformation with the new normals in place. Joining us this evening are some of India's brightest minds from the industry, who will, in the course of the next 1 hour, discuss in detail the issues which are shaping the industry as we speak. Also joining me here is my co-host and colleague Rajrishi Singhal from Mint. So without taking more time, it's over to you, Rajrishi, to get the conversation going.
Thank you. Thank you, Deboshi. Good evening, everybody, and welcome to this edition of Pivot or Perish. So today the focus of attention is the banking sector, which in some ways is the barometer for the economy. The first 2 months of fiscal 2021 have been extraordinary. We're going to have some extraordinary changes in our life, in the way we work, in the way we play. The year is not going to be what we thought it was, what we had estimated initially. This evening's conversation will hopefully give us some idea of where the banking industry is headed. So without wasting much time, let me introduce you to the stellar panel that we have today with us. We have with us Arundhati Bhattacharya, former chairman of State Bank of India and currently chairman and CEO of Salesforce India. We have Zareen Daruwala, who's the chief executive of Standard Chartered Bank India. We have Arijit Basu, managing director of State Bank of India, India's largest commercial bank. We have V. Vaidyanathan, chief executive of IDFC First Bank. And we have Mr. Milan Sheth, who's executive vice president, India, Middle East and Africa for Automation Anywhere. Hello, everybody, and welcome to this show. It's a pleasure having you all on the show. So without wasting much time, let us dive deep, straight away. And my first question is to Arundhati Bhattacharya. Ma'am, as a former chair of the country's largest commercial bank and as the country head of a key software company, can you help us map what the next 6 to 12 months will look like, both for the economy and for the Indian banking industry?
Well, I think, the Indian banking industry, like the rest of the economy in India, was already facing a number of challenges when the pandemic hit. And obviously, therefore, these problems have only multiplied. And therefore, the challenge is also very, very high. That being the case, I think, in the next few months, what the banks really need to think through is how are they going to face this future. And the future is going to be extremely different from what they have seen anything anywhere in the past. So I think what's going to happen is that banks will more and more look at how they approach the entire customer journey, whether they want to be distribution heavy and branch light, whether they want to be asset light, liability heavy, transaction heavy, or they want to be something different altogether. So it's going to be individual banks will have to take a call as to how they see their future progressing. But one thing that will be uniform amongst all banks will be the fact that they will all understand that they have to be data driven and they have more digital. Because today, all of these have to be delivered in an omni-channel manner, and you have to allow anybody and everybody to work from anywhere, to be available, whether it be employees, whether it be customers, whether it be vendors, whether it be service providers. You will have to make those arrangements so that this can become a reality. Because this is not something that's going to go away. So your disruptions can keep occurring. And as they keep occurring, you can't possibly, suddenly stop your business because life has to go on. And therefore, I think, your pivot or perish, the title is very, very telling. It is one of those rare moments when people really and truly do need to pivot, because if they don't, then they are looking at a very, very uncertain future.
So let me go to you, Zareen. Um, you're the only foreign banker in this group, and as a foreign banker, how does the pandemic and its effect on the economy change your bank's approach to business in India? Will you say, will you have do you have a list of what's bankable and what's not bankable anymore? Has it changed from your earlier list? Uh, how are you pivoting?
So, though we are a foreign bank, we've been in the country for 160 years. So I think we are more Indian than foreign in that sense. And to my mind, in terms of a long-term strategy, really nothing changes. But as Arundhati said, I think in the next 12 months, the way the customer behaves will also determine how we serve our customers. And clearly, because customers will be nervous about face-to-face interaction, etc. So a video KYC or as, as much as possible usage of digital channels will be the way forward. So, for example, in our corporate side, we have 99% of our customers, 99.5% of our customers using our digital offerings, the internet banking and the works. Similarly, in our service journey for our customers, more than 75% is digitally enabled. And I think the endeavor is to take it to 90% at least, so that you have very little face to face interaction. And that's the way we are going to change our digital offerings in the next 6 to 9 months. Having said that, on the sectors, your question was: are there few sectors that you would look at not doing? To my mind, no. I think there's always a winner in every sector. And even if we see sectors like cinemas or hotels or airlines, I think it's a matter of 6 months to 12 months before the good players will bounce back. So we are taking a slightly longer term view on our customers right now.
So let me go to Orijit now. As I said, we are truly in an extraordinary situation. And in normal downturns, working capital cycles stretch by 15-20%. But this time, it could shoot through the roof. Coupled with that is the RBI's regulatory forbearance on working capital loan repayments, where it can be, deferred working capital loan repayments can be converted into funded term loans. If you add all of this, what is, going to be State Bank's approach to loan demand? So far, we've seen the banking industry has displayed extreme credit aversion. Um, know, when will, so we have enough liquidity, the RBI has made enough liquidity available in the market. When does liquidity infusion turn into credit creation?
So I think there are two parts to your question. First is how do we look at things post what has happened due to COVID, and the other one relates to what is being written in the media about our so-called, I'll put that in inverted commas, so-called credit aversion of the banks. And I think the two issues are in some way interrelated. So as far as the first one is concerned, I think when I speak for State Bank, I'm speaking for largely the entire banking community. I think the banks were very quick off the block. As far as State Bank was concerned, we realized as early as around the 20th of March, even before the lockdown had been announced, that all our customers might need assistance. So immediately a 10% emergency line was offered to any non-NPA account. And the good thing is that the customers themselves at that time were unaware of how things will pan out, how long the lockdown would be. So they felt very reassured that this line was being offered, but not all came forward. So 2 or 3 months down the line, what do we see? There are many enablers that have been given both by RBI as well as the government. I'm not getting into the details. You have also mentioned about term loan deferment, about or the support that the government has given, the 3 lakh crore guaranteed scheme for MSMEs and so on and so forth. But what we find is that while the offers are being conveyed to borrowers, it is not necessarily that the borrowers are going overboard to take on more debt or necessarily take on even the term loan repayments. So we very recently announced our first the Q4 results, and in which there was a lot of queries about how many borrowers have actually availed of the term loan repayment, which is not more than around 20%. So in a way that is healthy, because to link it to the other part of your question, I think what had happened was that the banking sector, which had gone through unprecedented stress for quite some time, uh, was finally being able to get its act together, because the larger banks, state bank, we can speak for ourselves, we had been able to clean up our balance sheet and make adequate provisions to a very large extent. Now, given this scenario, I would try to address your question of credit risk aversion. For the last year or 2 years, if you look at the Indian economy, last year, the final growth rate that has come is around 4.2%. This has been one of the lowest. Now, what does low growth mean? Low growth means that there is lack of demand and lack of sufficient investments which are coming in. Now, bankers can be ready to lend, bankers are ready to lend, but there has to be takers for these loans. Now, that had not happened to the extent that we would have desired. But I personally feel 2021 and going forward the next couple of years would have been extremely healthy. The government also had taken a lot of measures to ensure that the economy gets back into track. Unfortunately, now we have the COVID situation, in which two things will happen. One is, as Zareen rightly said, we need to support our customers, which we will be doing. We have already done, and because it is for the good of our customers, it is for good of our own selves. If we don't support our borrowers now, the ones who have given us no pain whatsoever, we will be creating unnecessarily problems for them. But going forward, how much of growth can happen, how soon, that would depend on the various prognosis that is now out in the market. The best that I have heard is that first 2 quarters, of course, there'll be negative growth, but Q3 onwards, there could be positivity coming back in the economy. And thereafter, I think we can get back into the growth mode, and we can have lending picking up. As far as the retail side is concerned, the bank is trying its best. Already in the second half of May onwards, the retail demand is slowly coming back. Home loans and our personal loans especially are again seeing an uptick. So it will be a measured kind of way in which the banks will respond to this. But I think I made my point clear about risk aversion, because there is no risk aversion for good quality credit after we go through the standard process. On the one hand, the banks are blamed that you have taken up poor quality credit, and on the other hand, you are now being told that you have to go forward and lend irrespective of what the quality of the credit is. That cannot happen. But yes, for the MSME sector, I think they need a lot of hand holding, and this 3 lakh crore which is being disbursed, I think by the entire June we will be able to do quite a bit. That will come in very handy to at least see that they are supported.
Thanks. My next question is to Vaidyanathan, man who is the youngest, perhaps, banker in this group and is the most agile, who became retail head at a very young age of a large bank, and then was headed insurance company, headed a finance company, and now pivoted to a bank which was originally an infrastructure financing bank, which is also pivoted to a consumer retail financing bank. So you've got pivot written all over your CV, Vaidyanathan. So the question is, what kind of good do you think your bank will perform now? Where do you see lending opportunities in the post-COVID world?
See, I was carefully listening to when Arijit was speaking, and I can understand all the comments going on right now in India. GDP low, demand low, companies going out of business, not able to pay salaries, and then what is the impact on businesses? It's on everybody's mind. But we should also know that after every of these crises, we look 1 year forward or 6 months or 1 year forward, that every single headline that you see would be the reverse of what you're saying today. So if you might see that, look, sales are crashed 60%, next year at the same time you'll probably see sales are up 60%. So the sentiment just 1 year forward would be very, very different. So I think first of all, the key opening line I'd like to make is that the opportunity that all of us will see has not gone away. We're not going back in Stone Age. And therefore, 1 year from now or 6 months from now, we could be seeing a very different buoyant India, and you could just feel that this is a very bad dream. So I think this one picture should be on our mind. The second picture that comes to my mind is in this context of pivoting, which is the key subject of the discussion today, is that if the opportunity is there, then the way people are going to access this opportunity is going to be very different, because everybody knows, we all talk about it, that now digital is going to become center stage. The ecosystem is becoming more and more digital. Regulators permitting more digital transactions through eKYC, video KYC, and all that stuff. The analytics and credit bureaus and Jan Dhan, Aadhaar Mobile, all of them come alive. So that ecosystem is now a new way of accessing the opportunity. Third thing is that, in my mind, is that if the way to access the opportunity is going to be different, in my mind, the big thing is going to be that India is going to become far more inclusive as a result of COVID, because digitization has made many things possible, and particularly COVID has accelerated a lot of things. So let me just say that, therefore, we have a huge, huge opportunity of creating an inclusive India and an inclusive banking in India as a result of this crisis, as well as digitization.
Okay. So, Milan, there are estimates that about 25% of all banking operations could be automated in the next couple of years. But I think the COVID pandemic changes all of those estimates. In your view, and in your work with various banks, what operations do you see getting digitized in an accelerated manner? Retail liabilities, retail assets, treasury, transactions. Where do you see accelerated digitization and automation happening?
So Rajesh, I think everybody touched on the digital as a new wave. If I take the learning from some of our global customers, so ANZ, JP Morgan, one of the big things we learned with them is that they made automation as a citizen initiative. So every part of the organization automates, not just specific to a function per se. But I think the larger point, if I pick up from what Mr. Vaidyanathan said, that I see digital and going digital in a couple of other lenses also. So we are seeing automating heavily across functions. You've not had an opportunity to run contact centers, so you automate that, and bots can do some of the technologies we provide can do that. You do the asset side, liability side. You also look at all the internal mid office and back office functions. Those are the obvious ones. I think the other piece which has come up in a big way is document management, because still in my view that a lot of engagement we have physically is because in any bank the amount of, whether it's you're an insurance or you're a SEBI guided IRDA or RBI, the amount of document we manage internally and externally with customer, probably that will make a massive change, because the reality is that in last 3 months KYCs have happened, accounts have opened, transactions have been done, and hence that entire reliance which we had document, whether PDF, digital or otherwise, probably will start getting automated. And probably the last piece, at least we have learned, and I'm just taking from, because some of the biggest global banks runs their operations from India. Some of the names I took earlier, and they all ran their operations at 90 to 95%, recovery or resiliency rate, simply because they were A, doing it in a digitized format, and B, they were using a lot of non-human interfaces like bots, etc. So I think Rajesh's comment is what everybody has said: move towards digital, pivoting and accelerating that adoption, probably which did not happen for a variety of reasons. And I think that clearly that barrier has been surpassed. And the private joke we all have, I'm sure even Arundhati might have heard this, is that what all our sales pitches and marketing over the last 10 years has not done. I think in the last 3 months, the overnight digital adoption has happened. Sadly, in a little bit of a bad way, but that I think is giving a phenomenal cost play as well for new banks, older banks, and so on. That's a kind of a bit of a response.
Yeah. No, but sorry, just to interrupt. You said that a lot of documentation that it was still manual will get digitized. I think a lot of that was already digitized, right? Let's say trade transactions or other transaction-related banking. A lot of it was already digitized.
Yeah, no. So it's digitized, but you still have PDF, Rajeshi. What you had is that if I use a little bit of a the banking terminology, the straight through processing
Yeah.
rates. If I look at the banks or insurance companies in India, with let's say some of the new age, and probably IDFC First is a relatively a newer company, will set the processes differently, but the legacy companies have a very limited STP rates today. And that is
Okay.
what I'm referring to. PDFs, emails. You have an email trail going with 10 grievances. You don't need that. I think some of it can straight away be digitized and responses can be done.
Yeah, that's it. Yeah, sure. Yeah. Next question is to Madam Bhattacharya, and the question is, RBI has granted banks regulatory forbearance, as it should, and a lot of other central banks and regulators have also granted their banks regulatory forbearance. But the worry is this comes on top of the stress that exists on bank balance sheets in terms of the NPA that both in terms of the NPA that exist and the borderline NPAs that have not been recognized as yet. We've today carried a long form story by Narayan, formerly of Standard Chartered, on the NPA risk that banks carry on their books. So, how do you think will bank balance sheets emerge from this pandemic? What will they look like in March 2021? And what kind of remedial measures do we need then during March, after March 2021? You're on mute, ma'am. You're on mute.
Sorry. So I'm saying this is a question that probably would have been better answered by Arijit and Vaidyanathan, because I am now more technology than banks and economics. But I would like to take a shot at answering. Something, for Indian economy and Indian business, this is not the first VUCA event. Unlike what is being said about the rest of the world, India experienced one such event, which was very different and totally unexpected, when demonetization happened. And for a while, all of the businesses had to change the way they were doing the business. Okay. Of course, the fact remains that at point of time, we didn't have this uncertainty of when the problem would end. We knew that there was a finite timeline of 2 months, 3 months. And while, yes, a number of businesses did go under, there were a lot of difficulties. But as Vaidyanathan said, a year down the line, people were recovering, people were beginning to look, at increased sales again, increased demand again. So, the fact is that India, as such, the economy is quite resilient. We must remember that. It is very resilient because of its demography, because of the number of people we have, the demand we have, and a lot of the demand emanates from the bottom. So, if you are looking at the bottom right now, agriculture is not doing too badly. This time, the monsoons are almost bang on time, and hopefully, we will have good monsoons. And if that is the case, there will be money in the hands of the rural population, as long as the government is able to restore the supply chains, bring it to the market, do the procurement. So money will flow into the rural areas. The government is also planning to fund Narega, which is again something that's going to definitely, put more money in the hands of the people. Already the daily allowance for that has been increased. So, there are several things that are being done in order to put money into the hands of the people at the bottom of the pyramid. The one big, what should I say, problem right now is, when do we see everything going back to near normal? We are not saying normal, but near normal. So, where some countries took 3 months for the graph to turn, some countries took smaller time, some countries will take longer time. Where is India? Nobody knows. And that, I think, is the real, issue right in front of us, because a lot of people have been asking me that you've joined at such a terrible time. But I will say, in a way, it's the best of times and the worst of times, because it is obviously a terrible time. But it's one in another way, as Vaidyanathan was, or as Milan was saying, it is also a good time because people are realizing that yes, this is absolutely necessary. Digital is necessary. And believe me, for a company like ours, we have been delivering 98.9% of service, no disruption. Within 5 days, everybody was working from home. And we went into a lockdown 5 days before the government went into it. Okay. And the strangest thing is, many of our divisions are actually reporting increased productivity, okay, increased attendance. So you look at it in every way, there has not been any loss. And in fact, I was just joking with Vedinathan before this started that, when I was in SBI and we were trying for a work from home platform so that we could accommodate some of the ladies who needed to be at home but still didn't want to give up their jobs, and we didn't want them to leave either. There was a lot of pushback saying that the moment you allow work from home, people are not really going to perform, and they will, laze on the job, and you won't be able to monitor them. But, today I now believe, that misconception is very firmly put to rest. People will work even if you're not peering over their shoulders. There is no need to bring in everybody into an office, make them sign an attendance register. Much of this can actually be done from anywhere. And that freedom that we have got, we should not forget that. As we go ahead, that is what is going to ensure that our productivities go up, that our efficiencies go up. Many of the things we were not able to do properly before gets done properly now. So, there are a lot of upsides and a lot of realizations that have accompanied this crisis as well. It is a crisis of humongous proportions, especially it's a human tragedy, actually, more than anything else. But because of the human tragedy, there is an impact on economy. Having said that, I will say again that India is very resilient, extremely resilient. We are not dependent on any central dispensation to do everything. There is a lot of innovativeness, a lot of entrepreneurship in the country. Milan is one such example, in fact, of entrepreneurship. So you see a lot of this energy in the country, and I know that people will adapt to whatever are the change situations. But the fact is, people, now that they have the time to be at home and maybe they're slightly less pressured because business is not up to that level, this is really the time to strategize about how you want to take this forward. What are the changes that you want to make? What are the lessons that you have learned? What are the ways and means that will enable you to still keep your head above the water? And there are ways and means, believe me, it can be done.
Right. Just on that note, we will go to a couple of audience questions. Viewers are posting questions on our social media handles. So there is Aniket Okale. He's from Pune. He's an agriculture student of agriculture. He's asking, will there, in the change scenario, post-COVID situation, will there be more focus on the priority sector? So, I mean, all the bankers are, feel free to answer this question. And there is another question from another viewer. He is asking whether banks, what kind of action banks are seeing on the MSME lending front? Are you seeing a lot of MSMEs lining up to, borrow money? What are you seeing on the ground?
Okay, let me take the first one. The what's actually happening is that while we are seeing so much crisis all around us, and many people are in deep pain, small entrepreneurs are in pain, they're not able to pay their salaries, it's very hard. But the rural economy actually has been not that much affected. We have a large rural base of close to about 3 million live customers whom we're servicing even today, and we are in touch with them. The sense when we talk to our employees who are in constant touch with all of them is that they feel that when the lockdown will lift, then their ability to service the loans will be pretty good. I must tell you one statistic, and it is very telling. When this moratorium was provided, we provided to all our rural customers suo moto. We provided moratorium, all of them, for 3 months. And of course, anybody wanted to come out could come out. because they had vernacular problems coming to internet and applying and all that. When moratorium ended just now, and rather the moratorium 2.0 came, before that we reached customers and close to 60% of them paid straight away, no issue at all. So therefore, there is some humming economy that is going on there. A second angle that we're seeing in rural areas, particularly private sector areas, is that the quickness with which even that area is turning digital. We always think of urban areas becoming digital, but even microfinance customers, if given an app, their ability to access it, or even pay installments through digital, that is going to be a very rapid change. And the digitization of rural India and the ability of rural India to go digital will be a very defining moment for India, and probably as big an event as the way urban India migrated. And third point to the second question actually is about demand, and actually ties to the first question that Rajeshri asked me. Demand wise, we have seen that consumer demand, meaning consumer durables, television, refrigerators, two-wheelers, these kind of demand, that is up back to 70% of what it was same time last year. Already up in the areas that is opened. But SME lending is as good as nil. So we are seeing a two-speed economy where consumer consumption is immediately picking up, but the SME lending, loan against property, business loans, 10, 15 lakh loans, that is as good as not there. So our theory is that consumption will start first, and when demand comes through consumption, that will lead to growth of the SME economy. And it's maybe a 6-month lag, is my opinion.
Let me just quickly ask you again, Vaidyanathan, about MSME. In your presentation, investor presentation at the end of Q4, you list MSME as part of retail.
Yes.
And I found that a little surprising actually, because the rest is big corporate infrastructure, and MSME microcredit is part of retail. Now,
Yes.
are you, will you change your strategy there? Because the government has also changed the categorization of MSME. Now, the turnover limits have been increased. All the, benchmarks have changed and have been bumped up. So, what will your bank's approach to MSME now? Will you, increase the percentage of the asset contribution by MSME?
See, MSME is a very crucial component of our business. It's almost like the big piece in our bank. We have three engines that fire in a big way. One is consumption, one is MSME, and of course, third is the corporate. Very simply put. Now, but focusing on MSME is a very big piece. The reason why we clubbed it together is that we focus on the smaller, lower end of the MSME. Even a 25 crore loan is an MSME, but even a 20 lakh rupee loan is a micro entrepreneur. So we going by ticket size, whether somebody's bought a 20 lakh rupee home loan or somebody's taken a 20 lakh rupee, a loan to power the business up through working capital, or sometimes people take even 1 or 2 lakh rupee working capitals from us for run small businesses. So in a ticket sense, it's all retail. This is it's more by ticket size. In other words, when we categorized it, our sense is that this business can grow indefinitely for the next 20-30 years. So this is a very long-term story. People who are thinking of our bank as a new bank, as a starting up, they're actually making a mistake. They're not thinking about what this game can be. I was studying in the US, that US is now, for example, of course, we all know a developed country, per capita income of $60,000 or more. Even now, small entrepreneurs as an opportunity is underpenetrated. 180 million small Americans are either don't have enough access to that category of startups or credit. That's what they claim. So the point where I say that this is a very long game, and we believe that with digitization we can change the game in a very big way.
Yeah. So, Orijit, when I asked Ms. Bhattacharjee the question about NPA and the stress on the balance sheet, she referred to you. She said Orijit will be the best place to answer the reply to that question. So, let me lob that question to you. Also ask you at the same time, what kind of regulatory forbearance would you like to see from the Reserve Bank, in addition to all that has, already been announced? For example, your Eco Wrap, the newsletter from State Bank of India, has suggested that maybe, income recognition and asset categorization, the limit should be increased from 90 days to 180 days. So your views, please.
Okay, on the NPA, I had mentioned in my first part when I spoke that at least for SBI, and I do think for most of the other banks, the cleanup that was required because of the huge NPA buildup that has happened for various reasons, starting with the Reserve Bank asset quality review and the kind of stress that had built up in the corporate book, especially on the large infrastructure loans. To a very, very significant extent, over the last 2 or 3 years, they have been, the balance sheet has been cleaned up. Most of the banks, if you see their results, in Q4, we had a provision coverage ratio of 84%. And in the corporate book, even without what we call the advances under collection, it is more than 65%. So it is much higher than even the likely default, what we call the loss given default on an account. And yes, the larger corporate banks like State Bank and one or two private banks, you have seen therefore the gross NPA ratios, the net NPA ratios, and much more importantly, the likely pipeline of bad loans, which starts with accounts becoming irregular and what we call the SMA 0, 1, and 2. They were hardly 15 to 20% of what we used to see 3 or 4 years back. So which basically gave us a very strong pivot to start from, and so that we could, as I said, 2021 and 21-22 would have been extremely good years, given the scenario that we know is true for India, that India is a growing economy, young population, demography is right, so much to do on infrastructure, and so on and so forth. There is no reason why, industry, economy would not have grown, and the banks also would not grow. And I don't think that scenario has completely changed because of COVID. What has happened is this is a major disruption, which, as I said, we know that Q1, no one could walk out and there was hardly any work. Q2, it would be a work in progress. And there is hope and expectation that Q3 onwards, it will start picking up. As has been rightly pointed out, I think agriculture is a very, very good thing that has happened. Retail demand, as we also see, is coming back. And therefore, going forward, I think as much as we can, we should be in the interim supporting the companies in any way that we can, with regulatory forbearance or even without that, and which is why all these additional lines have been given. On the MSME sector, there was a question. I think one of the very good moves that was announced by the government was this additional 3 lakh crores of completely government guaranteed additional limits. So what it means is that 15 lakh crore was the MSME outstanding as on 29th of February in the banking system. So for good loans, that is for all the standard loans. The government said another 20% of that, which is 3 lakh crores, and this entire thing is guaranteed by us in case there were to be a default. And we are now going all out to ensure that whoever wants this 20%, we will be giving. As far as regulatory forbearance is concerned, I think RBI, we had requested the RBI for 6 months of term loan deferment right at the outset. RBI initially gave 3 months, and then when the lockdown got extended, they have given 6 months. They have also permitted working capital reassessments to be done, which means basically that the working capital cycle can be reassessed and we can go forward. So RBI is also been very cognizant of the situation. The circular which currently on which we function, under which we function, which is called the 7th June circular, they have given relaxations on that already. I think RBI's response also has been on the liquidity side. So going forward, depending on how the economy opens up, I'm sure that they will consult us and be able to support us in the way that we can. Uh, as to how the NPA situation will look, yes, because some of the weaker accounts, which are in sectors which may have got affected, there could be temporarily a slight uptick. you mentioned some report which had been given in the today, and I have also gone through it. It's very difficult to make a guess, but I would not like to guess on the more pessimistic side. The sole reason being that I don't think COVID can change the completely the way and the direction that the Indian economy has to take because of our uh, requirements, our demography, our young population, the kind of steps that the government has taken, the enablers that are being given. If the economy goes in the right direction, then all these companies also would be required to come back. And the banking sector also, to my mind, I don't think just because of COVID, we are going to see a repeat of what we saw some 4 to 5 years back. But yes, in the shorter run, we are gearing ourselves up. We know that there could be some requirement of making additional provision, and we will try to keep our balance sheet as strong and as healthy as possible, as strong as it was on March, as at the end of March quarter. We would slowly be, and I think all, but that would be my broad sense on both as to how the banks would deal with the likely NPAs that may come. But I think personally that it is not going to be a permanent feature. And companies which have good corporate governance, which have a good business model, they will all come back sooner rather than later as the unlockdown starts progressing.
Thank you very much, Mr. Basu. We have more viewer questions which are coming in. So one viewer wants to ask Ms. Bhattacharya. So the viewer wants to know, Ms. Bhattacharya, whether what are the things that you wish you knew as a banker than what you now know as a tech player? You know, now you're in the technology domain. So what are the things that you think that you should have known at that time?
Well, as a banker, I think what probably I should have known more would be definitely in the area of technology, what all is there. Today when I am discovering, the cloud offerings, the kind of AI that is available, the kind of analytics tools that are available, frankly, I did not have any understanding of these when I was a banker. So we went about it more intuitively than anything else. Thank God our intuition was right, so that SBI today is very digital savvy. But I think it was very intuitive what we did. But today, there are so many things that are available all around us. So whether it be, integration layers, whether it be your data analytics, whether it be robotics, whether it be the automation tools that are available, and which I'm sure Milan knows a lot about, those are the sort of things we didn't have deep knowledge about. And more, we used to hear, even when I was in the bank, I used to keep wondering that whether at some point of time banks will be actually technology companies that does banking. And more, I'm beginning to tend to understand that that is probably the way things will happen. Because, today anything and everything runs on the backbone of technology. Without technology, it's like the spine, you can't stand straight. Okay, so you have to have it. And it doesn't matter what kind of initiatives do you do. It doesn't matter whether it's an employee onboarding. And believe me, I have been onboarded digitally during this period. I joined on the 1st of April after the lockdown. And the strange thing is that whereas I have visited Salesforce towers in San Francisco, I have visited the entire top management of Salesforce and met them physically. I have not yet visited a single location of Salesforce in India, and I have not met a single one of my Indian colleagues physically. Okay, but work is going on. So you can just imagine the kind of flexibility that has now come into the entire system. And this flexibility actually increases your productivity hugely, increases your efficiency hugely. And means this is something that I always dreamt of, but I didn't really know about. For instance, I used to keep telling my guys that, if we only had such a thing where the branches would be very small, there'd be one guy over there, where somebody who had anything other than to do with cash or anything other than to do with an investment advice or a loan would come, say a nomination change, say a address change, say changing of a fixed deposit from one tenure to another, say taking a withdrawal from a PPF account. So anything, any of those very many things that we do, they should be able to come there. They should be able to give the document. You can scan the document, send him an SMS as to what is the request number. And then there could be one back office where you could intelligently send all these requests to, and they would get action. You would have SMSs coming at regular intervals, and it would be finished by the end of the day. The person wouldn't have to wait. You wouldn't have to have so many counters. You wouldn't have to have such a big branch. But these are all realities now. So there are so many things out there which we don't really know about, because we don't have time to look away from what we are primarily doing, but which I think is very important, because at this point of time we are changing on a daily basis. Similarly, another thing that I think was very important as a banker, and which I couldn't do as much as I would have loved to, is education. How do you educate people? How do you keep them updated? Every day there is a change, every single day. And today, sending out these master circulars and circulars, nobody has what should I say, the energy or the attention span to read all of them. Everything is compressed to a Twitter. So, how do you do those modules that are so short and so sharp and yet keep your people updated? Again, all available today. But we need to be able to be aware of this. So, any industry that you are in, you need to be aware of at least 4 or 5 other industries that are impacting you very closely in order to really do, as well as you would like to do.
Well, absolutely, couldn't agree more. We have another question. So this viewer wants to understand whether the banking system is going to see its next flurry of NPAs. He wants to know if a bad bank makes sense in the current scheme of things going forward, and what role of ARCs do all the bankers see going forward. Maybe Miss Daruwala can answer this, and I'll pass the question to others as well.
So, Bad Bank has worked extremely well in US post the Lehman crisis. The TARP scheme really worked, and frankly, when one sees the experience, the kind of hit that finally emerged was much lower than what was expected. Similarly, in Malaysia, we've seen Dana Harta experience, which was extremely good experience. And the way they went about it, Dana Harta, they actually told the banks that if you don't sell the assets, then you will have additional provisioning. So they almost got the banks to sell the assets. And it was resolved in a very, very efficient way. And eventually the hit that came to the banking system was quite negligible. So we've seen experiences of other economies where it's worked well. So to my mind, it is a good time to look at a bad bank concept. Certain things are very important. The kind of people who are managing the bad bank, they need to be people who really have that experience and are professionals. And also, it frees up the existing banks of focusing on stressed assets, and instead of that, they focus on incremental credit. The other good benefit of a bad bank is that it aggregates the debt in one place. Today, if a customer wants some resolution and they have 10 banks, to get 10 banks to agree on a common approach, it's quite time consuming, by which time the health of the borrower sort of deteriorates. So it makes a lot of sense in my personal view.
And I think, Zareen, one other thing is today the provision levels are high enough to allow that bad bank to happen. Earlier maybe that was not there. Today, as Arijit was saying, the provision levels are quite high.
Sorry, please go ahead. Sorry.
Yeah, sorry. I was just to add to that. That is a crucial difference. And why I think also that this is a very good idea is precisely what Zareen said, that it is a humongous challenge to aggregate the debt and solve it. So this is the thinking I think that the banks had when we decided to recommend this. And I think the question also wanted to know what about ARCs. I think to some extent ARCs have worked, but the issue is that again, they have not been as successful because they cannot take a holistic view of the entire problem. And I think we need to keep on trying new things so that the process of sort of cleaning up the banks and going forward can continue.
No, while we are on the issue of NPAs, let me go to Milan. How is technology changing credit appraisal? Glenn? We see this whole new breed of lenders, all kinds of lenders, where basically you can transact on mobile, and they have very innovative ways of understanding what kind of credit standing you have. How is that changing?
I think Arundhati touched on it earlier that introducing and including two data points. One is I think one of the challenges in the current credit appraisal process is the past data and ability to have it at the time when you're making that decision. And that's where I'm just getting a little technical here, but some of the bots we build are machine learning bots, which learns from the patterns which have been created. Earlier, we used to rely heavily on the human judgment, who's actually doing that appraisal. If I take one simple example, that the mortgage in the US today, uh, and it checks almost 18 parameters on a historical basis, and that all happens live when the person is approving that mortgage. So everybody touched on the AI and ML component. I think it's here. It's already being used in the play. One more comment I'll probably also make is the augmenting human capability. I think in credit appraisal for retail or even for institutional areas is, how do you get an incremental view or if I may say, a second view, a second opinion, which probably again a machine can add to. So enough examples. Many of the banks are doing it globally, and some of the Indian banks or NBFCs have started that process as well.
Zareen, I just wanted to ask, we had a conversation earlier this week and in which you alluded to some changes in strategy once the lockdown was announced in late March, which included, work from home and how you had to, figure out what work can be done out of home. And now as we enter the fifth lockdown and we have Unlock 1.0 as well, both running simultaneously on parallel tracks, what kind of changes do you see in the work, in your organization? How will you change your strategy? What work will move to home and what work can be done from office?
Yeah, so actually, since we as a global bank already had the experience of China, in fact, China, the lockdown started in January. So we had the benefit of having seen how China moved. So we as a bank, in fact, prior to the lockdown itself, we were operating at 40 to 50% before the March 25th lockdown. And going forward, the way we're looking at organizing ourselves is that this, next maybe fortnight or so, we'll be at 10 to 20%, depending on the city. And after that, maximum, I think we'll go as 30 or 40% in the offices. And the rest of the functions which can work from home will work from home. So, to my mind, the people who really need to be in office are the treasury people, people who are in field collections. But a lot of the functions, including our call center, people are working from home and attending to the calls. And technology has enabled that to happen, which is fantastic, because that was something that, to my pleasant surprise, we could activate the call center within 2 or 3 days of the lockdown of working from home. So a lot of the functions are, as Arundhati said, people are working from home. And unless the COVID scare goes off, it will be very difficult to get employees coming beyond 30 or 40% because of the social distances that is needed in the office itself. So I think certain functions like legal and finance and compliance, a lot of them can work from home right now and for the foreseeable next few months.
Would you like to add something, Vaidyanathan?
Well, when we see things around, I draw inspiration from many other people whom we see around us in a common life and see how they have pivoted their model. See, for example, I see gym trainers. So these are people who normally help you in the gym, lift the weights and all that stuff. And then you might tend to think that, look, how are they going to work? What kind of revenue are they going to get? But when I go out, I see them now. They have the same clients, access to them. Clients have put an iPad in front of them, and they are putting them through the pace. They tell them, okay, run 100 meters this way, 100 meters this way, and the people are performing. And the person is somewhere else. He's not there live. He's not there. And he has a client, and his revenue is probably gone up because he's not having to travel to so many gyms now. Similarly, tutors are now, instead of coming home, they're remotely tutoring, and it's probably working pretty well. Doctors are performing pretty well, giving advice over long distance and all that. So when we see all these things around us, we say, if these people can pivot so much, we are, banking system which has the resources, which has the energy, which has the capabilities, has access to technology, which has the best, capabilities, best talent of people, we can definitely pivot. So when I see people around, I have just seen how the common person has pivoted is really unbelievable. I have someone who teaches me guitar, and he used to meet me, once every Friday at my home, and he used to teach me guitar. And now, he remotely teaches me guitar, and it works. So everybody around us is pivoting. Actually, I take inspiration from that.
No, I agree. There are people are making music videos remotely. I mean, my neighbor does that. He's a guitarist himself. So I mean, we have more viewer questions coming in. So one viewer wants to understand whether we will see more willful defaulters after this crisis is over, uh, and also is data security an issue as more people work from home? These are the two questions. Feel free to answer all of them.
Okay,
Yeah,
I'll take
I'll
the
take
first one
the
actually.
one on data security because I think I've been basically answering all the questions on NPA, and I'll come to willful default also. But I just wanted to give out a sense that how SBI itself has handled this entire 3 month period. From day one of the lockdown, we were able to give unseamless services, whether it is in the branch or whether it is through our online channels, not a single minute of disruption. And we were able to do it with the kind of technology that we have been procuring over the years. And we are completely reimagining our journeys. Of course, the entire approvals and back office work that happens in administrative offices, there has not been even, I would say, 5% lesser work that has happened in this 2 3 months. But the biggest change that we are now visualizing is even the branch. We are now enabling technology, the VPN, in such a way that we are imagining a world where every day everyone need not go to the branch. We can work from home or even have flexi offices. And that the kind of technology that we are trying to partner with other fintechs and all that. And for SBI, the number of transactions, the percentage of transactions was almost 80%, even in April and May, as against what we were having in the normal course. So that was one. As far as willful default is concerned, I think that is been part of the cleaning up of the system that has happened. And it's not that, I think if the intent of the question is that people have the ability to pay, but they will not pay, I don't think that would be correct. So all the borrowers who are looking at a good business model, they understand that unnecessarily they would not like to hold back on their repayments. As I said, uh, all the RBI relaxations which are available have been offered, and only a limited number of the borrowers have actually availed them. So they would all like to conserve cash. They would all like to be upfront, and I don't think that is something that we are looking at.
Thanks, Arijit.
On the
We'll have
on
to.
the
Sorry.
on the willful
Yeah, go.
defaulters thing, I must just say that the large well-known cases that we know that have had problems. If you leave them aside, on the small entrepreneurs, consumer side, normally it's not willful default. As we speak, many of them are in real pain. think about it, you don't even have 1 month's reserves, and suddenly for 3 months there is no cash flow, no cash flow. You got to feed your house, you got to pay your salaries, and otherwise you'll be tagged a defaulter, you'll become an NPA, your name will be on CIBIL, you won't get the next loan. It's a real pain. And I think people are in trouble. It's not really the willful default. And hopefully, with this kind of 3 months or 4 months of moratorium that is given, when moratorium is there, but economic activity started, so that can hopefully bring them the cash to start honoring in September.
Yeah. Look, thanks, Vaidyanathan. We'll have to bring this to a close now. I like the positive message that each of you has provided. I think yes, we are a very resilient society. I think we are a very an entrepreneurial society, and we will, I think, bounce back. As Arijit said, his prognosis is Q3, Q4 will see some growth, and I think yes, we will start to see some of the. In fact, I was looking at a research report today which showed that some of the auto manufacturing is coming back on stream. So we are hopeful. Yes, these are extraordinary times, and yes, these will leave behind some immutable changes, but hope springs eternal. And thank you everybody for joining, and thank you for your views. Have a great evening, have a great weekend, and please stay safe. Thank you once again from Mint and from my behalf and all my colleagues. Thank you very much. Bye-bye.
Thank
Thank
you.
you.
Thank
Thank
you.
you.
Thank you.
Bye-bye.
Great job.
All of you.
Bye. Bye.